One time for the underdog. One time for the underdog. You got the world on your
What's going on, traders? Welcome back to the FX220 YouTube channel. This is Oussama, expert forex trader and mentor, and in this video, as usual, we're gonna discuss the analysis behind the trades that I took on USDCHF and on EURUSD. These trades went in a very important day. We had the European Central Bank interest rate release, so we have to be very wary during this day because these high impact economical releases can have a big impact on the markets. And markets tends to react to them before even the release in certain ways that make us a little bit wary. So we will start with this USDCHF trade. So we had our monthly key level. This is from our top-down analysis. For the traders that don't know that, we have an approach, we call it the top-down analysis, where we start to analyze every single currency pair and break it down from the highest time frame possible to the lowest. We'll start from the monthly and we will start to plot our solid key levels, our trend lines, our channels. We apply our technical analysis on these higher time frames, and we start coming down from the monthly, weekly, daily, H4, 1 hour, until we get to the 15-minute chart where the magic happens. So all these lines and levels you see here are from our top-down analysis. These are solid levels that will help us trade in here. All right, this is what gave us, you should say, targets, you should say places to stay away from. These levels will explain basically a lot of market movements. All right, so imagine we don't have these ones. Let's remove this trend line and let's remove this monthly key level, and you see price coming in here, bouncing, reversing at this particular point. You wouldn't know why. Basically sit here, you don't know why did price suddenly decided to reverse at this point. But when you have your key levels and you have everything in place, all right, this is a major trend line. We broke it, we retested. We are also on a monthly key level. It was a resistance, turns into support, and boom, it's going up. This explains a lot and help us a lot. So as you can see, price was very choppy, but during this day, the interest rate release, we had our W formation on the EMAs. We had many confluences on this one, also the retest as we said, of the trend line, the broken trend line and the broken monthly level, and then boom, we shoot it up from there all the way up here. So I was in at our first confirmation candle. It was a strong candle. For the people that don't recognize this setup, let me draw it here for a second. This is how a W formation looks like. And the trade was relatively easy. We had banked 22 pips. So this trade met all our criteria. We had our pattern formation. We made sure that all the key levels are in place. We are aware of the news releases, and we know that market is at perfect conditions. We have seen trending behavior right here when you have this breakout out of the Asian session range, and then you have a strong burst. This is proper trending behavior, especially this candle right here where we entered was 6 pip candle, which is for the USDCHF, it's a lot. So it's not a very volatile pair. And this trade basically met all our 100% criteria. This is why it was in the money. So let's jump on the Euro USD. Notice here on the Euro USD, we had sort of like a pattern, but the confirmations were not very big. Notice that this confirmation candle right here was not very big. It has wicks to both sides. It signifies indecision, and this is due to because this economic release is related to the euro. So you expect the euro to behave a different way from USD pairs or pound pairs. They are all correlated, but this release is specifically for the euro. It's the interest rate decision from the European Central Bank. So you have market will tend to react even before, sometimes even a week before these kind of releases. This is why you get this. You be wary to not take trades around these times, only after you get like strong confirmations, because they're gonna be force moves, and this is what exactly happened. Even if this, you could say it's a pattern, this is another M formation, it's not valid because it's not at perfect market conditions. These are not perfect market conditions simply because you don't know what the market is going to do after the release, and you are expecting, especially on such high importance economic release, you are expecting big false moves and big stop hunts. This is why the pattern doesn't mean anything. These patterns happens all the time, man. But we will only take the valid ones, the ones that are in perfect condition. It's like you look at this, they're all patterns. Even here, the smallest one, you could say it's an M, you could say this is a W, you could say whatever. A lot of patterns. These ones, you could say this is a perfect M formation right here. Why did it not succeed and fell down? Why? Because it doesn't have to. Not every M formation is gonna be a valid pattern for you. It doesn't mean that market formed an M or it gotta be trending. We do not control the markets. This one, why did it fail? Simply look at this. We have a monthly key level. It's trading against it. If you want to trade it, at least we want a big break of this level right here. And also, don't forget the market cycle. We've been trending since a long time. Our market cycle analysis would suggest to us that price needs to pull back now, and we would be expecting a pullback to the upside. There's a lot of reasons. Also the timing. This is the false move of New York. There are a lot of reasons to not take this trade more than to take it. That's why I highly recommend you guys to do not trade solely just patterns. This is where most retail traders fail. They are trading textbook patterns without putting in the context, without putting in the market conditions, without putting in the timings, without putting in other confluences, strong confirmations behind the markets. They simply see a bounce off here, they take it, they see price hitting, but breaking out. Let's see this breakout here. They go long, expecting market's gonna fall all the way down. It's not gonna happen. Simply because you saw your textbook pattern doesn't mean at all that it's gonna be successful winning trade. This is where like 99% of retail traders fail at. go watch. You have the whole YouTube for you to watch the traders, the price action traders, and listen to their videos and explanations. They will tell you things like price bounced here, okay, we have our support level. Price bounced here, we expecting price, since price bounced this support level and we had a bullish engulfing candle, this is signifies that price is gonna shoot up. And we put here and we take our long position, we put our very tight stop of 6 pips, and we put our very target. This is 1 to 25 risk reward ratio setup, and I'm expecting price to keep going up all the way here. Why? And look, I've seen this hundreds of times. Go check out Instagram or Facebook when they simply think the more rewards you have, the better the trade is gonna be. But what if market does not fulfill all this? Doesn't make sense. I've seen it all the time. They say it's infinite risk to reward. Yeah, that everybody would be a billionaire if their setups looks like this, but it does not happen. You really have to know what you're doing in order to do this. This is what I see all the time from all price action traders, which make 99% of retail traders today. Go watch all their YouTube videos, the traders, the mentors, everybody. This is clearly going to be a disaster if you do think like this. They do not put in context all the other things they are missing. They forgot that this is a trend, this is a market, a bearish market cycle. Market makers have to fulfill these targets and numbers. They have weekly targets, monthly targets, quarterly targets, yearly targets. They have to fulfill them no matter what. Even if the news are positive, they use it as a false move. All right, news are positive, we'll take the market up for 5 minutes and then we'll bring it down again because our agenda says we have to fulfill this target and reach this number by the end of the week. They don't realize that. I mean, why would you take a trade based on just one indicator or one candle or one confluence, price action confluence? Do you think the market makers are gonna reverse a major currency that's the Euro USD, two of the biggest major currencies in the world today? They're gonna reverse it simply because it bounced off your stupid level. It doesn't work like that. You have to have solid confluences behind the markets. I mean, this is exactly what I'm trying to explain and teach to everybody. Stop looking at just textbook setups and thinking they're gonna win. Also, these Gartley patterns are harmonics. They're also fail bad at this. I mean, why would market makers and major banks and institutions and all these people that are making a huge transaction, why would they respect your bad pattern? I don't really know these patterns because I've never tried them. I know sometimes they tend to work like every other setups. You will find it working, but it doesn't work all the time. Simply because you have your harmonic pattern does not force the world and force these guys to take the market to your target. You have to trade in line with them, in line with their plans, in line with their market cycle, in line with their targets, with their agenda. I hope you guys really understand this and take it. We're back at our setup. As I said, we won't take this because it's a textbook information. We know that there is an important news release around this time. This was the interest rate release at this particular candle. Nothing much. They didn't increase the interest rates. They didn't cut them. So not really much happens. And we had our big downtrend. So we're expecting this to be really bad. If they didn't increase and the trend was already a downtrend, then you would expect a continuation. But this is the trick. When they trap everybody. This was the ECB press conference after the interest release. This is where the false moves tend to happen always. So pay attention to the release, to the official release, and to the press conference also. This is with everything. With the USD, with the FOMC and the Fed press conference, with the Bank of England press conference. Pay attention to these because every word they say at the press conference impacts the currency. And for everybody that entered here, let's say this is another textbook setup trader that took his entry here. He's waiting for the market to fall all the way down. Why? Because his textbook setup or his mentor or whatever told him that these informations don't fail and you don't have to take into consideration anything else except the pattern. So they are laser focused on this pattern. They're like zoomed in like that. They only see this. They only see their information. All right, and I'm waiting for it to fall. And this does not happen. This maybe exists in a perfect world, but unfortunately we don't live in a perfect world. So what do? Boom, they utilize this to stop everybody out. These traders will put their stops here, they stop them out, they initiate the breakout traders that want to go long, they execute their pending orders long, and then they come down. Now they stopped the short traders, they executed the pending orders of the long traders, so they made everybody lose. Now this is the real direction, and we've been waiting for this. I've been waiting for it. I didn't want to trade here simply because I knew a move is gonna happen after all of this nonsense. And I took it only after a strong confirmation. All right, this is our direction. They're saying to us, we've done. All right, we have trapped all the newbie traders, the price action traders, the textbook traders, every single one. Now, only the professional traders are left. And here is, take our money. They're spreading cash out here because they ran out of traps. What would they do again? They cannot do anything after all of this. They trapped everybody. They made everybody lose. Only few traders get in this direction. Only the smart ones. So, and you guys are. That's why I'm explaining this to you exactly. These are all secrets that I'm sharing with you guys. That's gonna make you with the other 1% of the winning professional traders. All right, 99% of traders don't know this or choose to not know it or ignore it, but this is the reality. I've got so many messages saying that I was trapped in this move. I mean, I'm sorry for your losses, guys, but you learn, you live and you learn. So you learn from them, and next time you don't repeat the same mistakes. So as you can see here, the trade went relatively easy. It took a bit of time, but it eventually hit the take profit. These were two great trades for the day. 27 pips on, almost 28 pips on here, 22 pips on there. This is close to 50 pips a day, which could be a lot of money for all of you guys. Could be 5,000, 10,000, depends on how much you're risking. And you want to get to this point when you're having your freedom, where you can take only a couple of trades a week and make large amounts of money. That's gonna help you get your freedom and live your life the way you want to live it. So guys, if you're looking to take your trading to a whole another level and be with the winning 1% of traders, I can help you with that. I'm currently taking in students for the 1-1 mentoring program. My full Forex trading includes everything about my Forex strategy and system. I have shared with my students all the knowledge and skills needed to become a phenomenal trader in quite a short period of time. You'll be learning all of this, where it will help you massively because you will know exactly what you're looking for. You will know exactly what to do. You will have a systematic approach to the market. You will have a checklist that you have to go through that's gonna make things way easier. So you just follow the steps. It's a system, so we should do this, do that, do this, do that, and we have our trades. You take them and they will be in the money. My students who took this program have transformed drastically from complete beginner traders to accomplished phenomenal traders in a very short amount of time. So if you're interested about this, I will leave the links in the description. You should contact me on Facebook or on Instagram, where I will have a quick chat with you because I'd like to know my students and I'll have a quick chat with them, and I'll be providing you with all the information about the 1-on-1 mentoring program and my Forex training, and I will be providing you all information about it. So I hope you like this video. Be sure to like and subscribe. Follow me on Facebook or Instagram. See you next time. Good luck. This is FX220.